Hey, welcome back to Everything Money. We are glad you joined us today. In this video, we will look at and analyze the company Snapchat, obviously very popular with the youngsters. We will use our 8-pillar analysis and our software to show you the financials behind this company. What do they make? How much debt do they have? We will use our software and try and separate the company health versus the stock price to see if there's an imbalance, and if it's undervalued, we might be buyers. We will also show you how to trade this. Mo, the glorious Mo, will show you if you want to trade Snapchat at a quicker pace. He'll show you the trading charts. Very interesting stuff. In general, why are you watching this? Who are these guys? I bring your normal person questions to a couple guys that maintain a portfolios of around $100 million. They have real estate. They have stocks. They have multiple businesses. We go to Mexico twice a year, Paul, the Mexican vacation homes. And so if you'd like to hear from a couple wealthy guys and what they're doing, like me, I bring you Paul and Mo, and they will tell us about the financials of Snapchat, Paul.
Thanks, guys. So first off, follow us on Instagram. We have a new Instagram account for the channel. We have all our personal accounts. Follow us. We're really adorable. So guys, this is our Everything Money software. You'll hear more about it. We're going to look up Snapchat, going to the 8 pillars.
You don't do this Snapchat stuff.
I don't have Snapchat. I used to have Snapchat. I don't do. I mean, it's just, so that's one of the things. The first thing that's going to say off the bat is, I don't know, whenever Instagram stories are like the thing. Snapchat was all about these stories that were 24 hours and then went away. Then Instagram and Facebook did it, and it's like,
what's the difference?
So we have to look up the user growth on Snapchat. I think they have user growth, but I don't really understand why. But either way, this is Snapchat. This is our software. Let's just start rolling through it. Now, first off, I'm going to tell you, the unfortunate part is they don't have a lot of data. They don't have 5 years of data for us to analyze. Oh, yeah, they actually do. I'm sorry, they do. $87 billion company. Our first metric, our first pillar is we want that $87 billion divided by their profit to be less than 22.5. It's actually NA. Why? Because it has no profit in the last 5 years overall.
Snapchat is enjoying its higher user growth in years, Paul. According to its latest earning report, daily active users increased to almost 300 million, a 23% growth.
I don't know anyone who uses it. I mean, I know people use Snapchat, but
not anymore.
I don't know anybody that does anymore. Maybe if you want to cheat on your spouse.
I mean, literally, that's probably it.
Messages disappear. It's great.
All right. So, return on invested capital is our next metric. We want it to be greater than 9%.
Pillar number 2. Uh-oh, look at that.
It's almost negative 9%. Why? Because they don't make money. Look at their 5-year free cash flow. Uncle Seth, negative $465 million, although last year they only lost $7 million in free cash flow. Okay, so 2 X's so far, not a great start.
Is this typical of a young company trying to grow?
Yes, of course, and you'll see that right here. This is their 5-year income. So the income growth is our next metric. We want to see 5-year income growth, 705 million to 3.73. So you know what? I can't be a hypocrite. How are they growing their revenue even though we think they're a dying company?
Okay.
I mean, this is incredible. This is 4 times revenue growth, but 5 times revenue growth. All right, net income. Let's go to net income numbers. They lost 3.27 billion. Now they've lost only 623 million. So in a weird way, it's a check mark. All right, they lost less money. Congrats. So guys, the next metric number 5, pillar number 5, is what I call the silent killer. We want to see shares decreasing or at least staying the same. What a company will do, especially ones that are losing money, I haven't looked at the numbers yet. I'm quite sure their shares outstanding are increasing. Why? Because the company is so expensive, they're going to want to issue shares to people, like the local crack dealer, giving them what they don't want, what they don't need, but they think they want. Shares outstanding, 1.23 billion to 1.58 billion. So they are diluting their investors. That is an X. We don't like this. Every year they're issuing more and more shares. And it makes sense for an overpriced company to do that. Why? Why take on debt that's going to be owed back when you can just issue shares that are not owed back at any time? You're just going to, you're just giving the people what they want. Nobody ever looks at this metric, and it's super important.
Paul, I looked up the most popular social media platforms and the fastest growing, and of the top 10, YouTube, Facebook, Instagram, Pinterest, LinkedIn, Snapchat's number 7. So I mean, it's growing.
Okay, $87 billion company, market cap. Now, they don't have any free cash flow, so our next metric is we want to make sure their long-term liabilities divided by their 5-year free cash flow number is under 5. Well, they don't have any free cash flow in the last 5 years, so there's really no use to look at that. They have $2.86 billion in total liabilities, but anyways, free cash flow. Let's look at that. Let's pray to God that there's free cash flow. Now, guys, in our exclusive software, we're the only software that actually adds the free cash flow number right here to the cash flow statement to make the math easy for you. Why? because cash from operations less their capital expenditures is free cash flow. Now, one thing I do want to mention here, Seth, that I do like, their cash from operations is getting better every single year. Well, not there, but it's getting better every year. They had positive free cash flow from operations, but they have a lot of capital expenditures. But look at their free cash flow. It is getting better. That is a check mark. Now, the unfortunate part is their free cash flow is negative over the last 5 years, so we can't apply a multiple of that free cash flow for eighth pillar. So if you go look at the 8 pillars here, it's just all bad, right? So for a company like this, $87 billion, guys, I would encourage you to go out there and look at what other $87 billion companies are out there that you consider boring and stodgy that actually make a lot of money and generate a lot of cash flow.
Let's not get crazy here. Just a month ago, this was an $83 stock. It's down to $55.
Wow, really?
Yeah, they fell like 40% in 4 weeks or something.
Well, they had this crash right here. I didn't even see that.
Yes, so...
Why did they have a crash? So they announced think about this, guys. They announced their largest ever user growth, or largest in a while, and they had a crash.
I think they fell about 27% in 1 day last week.
What was the reason?
Earnings report. I don't know what the earnings report said, but...
Oh, Kathy Wood buys 460,000 shares of Snap.
Boom.
I would short the crap out of it then.
Yeah, actually, that would be a...
Mower people...
That was today. They just announced it.
Go on, Paul.
A couple of ARK Invest exchange-traded funds run by Kathy Wood bought over 460,000 shares of Snap altogether on Monday as the price of these funds traded up over 2% in the day session. Wow. Interesting. Okay.
Well, were people trading Snapchat at a quicker basis?
I'm looking at this right now, and I kind of want to short it myself because it's a 55.60 right now. You have a beautiful downtrend. There is selling volume coming in. The next resistance point is about 52. No, what did I draw that line at? I think it was $49, $49.50. So you can capitalize a little bit more. All you need is one red and I don't know why I drew it in green. One red engulfing candlestick coming down, and I mean, you're good. This is something I kind of want to short this thing. This is a perfect setup if you can get an engulfing candlestick. Now let's just go look at the daily chart real quick. So you're under 4 major moving averages. I mean, this is looking pretty damn good. And today, you're really not getting too much volume. You have a little doji right there. This is looking really good. I'm going to short this. So
come on, Mo.
Yeah, if you want to learn how to short, join the Bid and Ask Nation. I have a shorting seminar in there. You learn how to short through all the Training 101 videos. But what I'm waiting for right now is an engulfing candlestick. And if you don't know what that is, come join me. $1.50 more per month. In addition, per day. In addition, you get everything from the Everything Money software. It's great. Access to all of us. It's great.
Paul, so the Everything Money software we created because our users said, hey, we like what you're doing here, but we want to do our own stocks, not wait for your videos to come out. So we created the software. It includes everything here and more to come. Has your news, has recent news, has all of our videos. We have exclusive content coming out daily. You have access to Mo, Seth, and I. There are over 6,000 people who are currently part of the community. You can talk to them in chats about your investment ideas 24/7 all over the world. We created this specifically to help our users out. And this has been a game changer. It is only 90 cents per day. It is less than a crappy cup of coffee. If you are serious about your financial future, this is a no-brainer. This 90 cents a day, if you just increase your returns by 1 or 2% a year, it could make you hundreds of thousands, if not millions of dollars extra. It's just math. It works. 90 cents per day is a no-brainer. Go to everythingmoney.com or Patreon. The benefit of everythingmoney.com is you don't pay sales tax yet, because we're not big enough yet, and you don't get double charged on the first month like you do on Patreon. But we're okay with either way you want to sign up. Go do it. It's a no-brainer, 90 cents per day. You get everything here. Now, one of the biggest benefits we have is we have our stock analyzer tool. Now, the issue with stock analyzer with Snapchat is they don't make money. The stock analyzer tool is for established businesses that make money, that we can project out future profit. I don't know when they're going to be profitable. If I just had 1 year of profit from Snapchat, I could sit there and say, okay, we see some glimmer of hope here. 1 year of profit, I can figure this out. I don't know what Snapchat is worth. In my opinion, there are 10,000 companies to buy from out there.
Yes.
Pick the ones that make sense. I'm quite sure if I did a search for $87 billion companies, I could find companies that generate $20 billion in revenue or more and generate profits of $2 or $4 billion a year. So why go buy Snapchat that's diluting me, that is suffering versus Instagram, Facebook, YouTube, and all these other companies? Why even deal with it? That's my opinion. Of course, I could be wrong. The stock could rebound, go to the moon. But remember, the right process wins over long periods of time. Dwight Eisenhower once said something to the effect of, The right process doesn't always work, but the wrong process most assuredly will be bad for you in the long run. That's just the way it works.
That's our take on Snapchat. Be careful, especially around earnings. And if you believe in this company, sometimes the math doesn't care about your beliefs. So be careful out there. We are certainly avoiding as value investors, but we hope you don't avoid our show in the future. You like that pun there, Paul? I saw you chime up there. Make sure you fondle the thumbs up on the way out, like we tickle Paul's little belly, which is very slim nowadays, Paul.
Oh, thank you.
Join the community. Learn from us. We'll see you in the next video.